Finances, however, are a crucial part of any business, yet from my experience working with both new and seasoned business owners, it is often a neglected aspect. People tend to chase sales in the first phase of their business, and that's normal. You need to bring in revenue. However, not paying too much attention to the financial aspects of your business from the get-go can prove costly later on. Let's look at the most common money mistakes new business owners make so that you can do your best to avoid them and build a solid business from the outset. Hello and welcome to the Savvy Corner. My name is Alisa and this channel is about personal and business finances, financial well-being and money mindset. If you're new, I'm so pleased to have you here. If you're not, hi, and thanks for stopping by again. In today's video, I want to address a few of the most common money mistakes I see new business owners make. Starting a business is not easy, and there are a lot of plates that you need to spin: marketing, sales, networking, admin, and of course specific activities that are relevant to the business you are running. Finances, however, are a crucial part of any business, yet from my experience working with both new and seasoned business owners, it is often a neglected aspect. People tend to chase sales in the first phase of their business, and that's normal. You need to bring in revenue. However, not paying too much attention to the financial aspects of your business from the get-go can prove costly later on. Let's look at the most common money mistakes new business owners make so that you can do your best to avoid them and build a solid business from the outset. One of the most common mistakes I see with new business owners is not having a separate bank account that is exclusively for business. Instead, they use their existing personal bank account to pay for all of the costs and to receive revenue. This is very common with self-employed people and can turn into a real nightmare for several reasons. First, it will be very difficult for you to separate personal expenses from business ones, especially if there are a lot of transactions going in and out of the account. Unless you review it every couple of days or so, you will forget what the expense was for, and the descriptions you see on your bank statements won't be very helpful either. Secondly, it will be tricky to keep track of your business's financial position due to the presence of other income and expenditure on that account that is not business related. And thirdly, if you operate as a separate legal entity, like a limited company for example, then you are legally obliged to have a business account in the name of that company. This is not a legal requirement for sole traders and self-employed people, but nevertheless, it's a good idea to have one. So as of the time of filming this video, if you are self-employed, this bank account doesn't necessarily have to be a business one. It can be a personal one that you use for a business purpose. And this comes in handy because you can expect to not have to pay a bank service charge or an administration fee for personal bank accounts, or at least that's the case in the UK. If you run a company, you need a business bank account, and most banks will charge a monthly fee to administer your account. But not all of them. I use a Starling business account and I also have a personal account with them. They don't charge any fees and I'm extremely pleased with the service and the functionality of the mobile app. So shop around, do your research and choose an account that is suited to your needs and your business's needs. The second mistake I see new business owners make is treating their business money as if it's their own. What do I mean by this? Especially self-employed people, they treat the money from the business as if everything the business generates in revenue is theirs for the taking. And this is the problem. If you are self-employed, then this money is yours for the taking. But you need to think like a self-employed person now, like a business owner, not like an employee. If you've ever been employed, then the money you received as income from your employer was yours to do as you please. When you run a business, things are a bit more complicated than that. Your revenue doesn't translate to income on a one-to-one ratio. this business that you are running also has some expenses that need to happen in order for the business to be able to generate more revenue in the future and to continue to succeed. You need to take into account your fixed and your variable costs of running a business and allow for a corresponding part of your revenue to be reinvested in the business. Also, you would need to pay taxes on the profit you make and either pay corporation tax if you're a limited company or income tax at different rates depending on how much you're making if you're self-employed. So by now, hopefully you can see that you can't just take money from your business and treat revenue as you would treat income, because you're not an employee anymore, or at least you're not acting in that capacity when it comes to running your business. There is also the element of money mindset and the way you relate to your business finances being a reflection of how you treat your personal money. But that can be the subject of another video if it's of interest to you. So let me know if you'd like to see a video on this topic, and I'm happy to create one that's dedicated to money mindset. If you're enjoying this video so far and have gotten value out of it, I would really appreciate it if you gave it a thumbs up. It really helps to support my channel, and I thank you in advance if you do. If you wish to subscribe also, well, that will just make my day. Since I mentioned taxes earlier, let's talk about the third mistake, which is not putting money aside for taxes. You don't want to end up in a situation where you have to pay a tax bill and you don't have the money to do so because you didn't plan ahead for this expenditure. This can mean the death of your business, or a journey down the debt lane, which can be quite costly for you, and it's not even guaranteed that lenders will want to lend you money, at least at decent interest rates, since your business is so new. And paying your tax bill on credit cards or overdrafts is the least cost-effective way of doing so, and you'll end up paying a lot more than just a tax bill. Also, don't forget the fact that after you pay your first tax bill, you will need to make payments on account to HMRC twice a year, by the 31st of January and the 31st of July, and these will be half of your previous year's tax bill. When I'm filming this video, the rules are a bit different because of coronavirus, but outside of that, these are the general rules. If you don't completely pay off your tax bill after you've made both of your payments on account for this year, you'll need to make a balancing payment by midnight on the following 31st of January. All of these details can be found on the HMRC's website for UK residents. If you're not in the UK, then follow the guidelines of your own tax authorities. The bottom line here is whether you pay corporation tax or income tax, this is a predictable expenditure. There's no way around it. And it would serve you well to avoid the mistake of not putting money aside for taxes, which can prove a very costly mistake to make. Another mistake new business owners make is related to treating their business money as if it's their own. And the mistake is this: not paying themselves a fixed salary. It can be difficult to do this in the first few months of trading, as you won't be able to estimate your revenue. But the more you trade and the more information you have about your business, the easier it will be to estimate how much money you can expect in revenue on a monthly basis. When your business becomes more established and revenue is predictable, it is good practice to pay yourself a fixed sum of money every month as your salary. This gives you a sense of security, it creates more structure for your business's finances, and it doesn't put such a strain on your cash flow as it would if you were to withdraw random amounts of money from that account every month. Paying yourself a salary is one thing, but are you paying yourself first? Now that's a thought, isn't it? To pay yourself before you pay any expenses, before you pay creditors and anything else that requires money in your business. Paying yourself first requires you to get creative in your business, to find new ways of bringing in more revenue and optimizing costs without sacrificing on quality. A mistake that I see often is the business owner's salary being the first one that is sacrificed when the business needs more money or when there are some unexpected expenses coming in. You want to avoid that if you can. Let that be the last resort after you've tried your best to bring in more revenue and to cut costs. Paying yourself first forces you to think outside the box, to not take no for an answer, to not give up after the first attempt, to put aside your fears and do whatever you need to do in order to not sacrifice your salary. It also signals to your subconscious mind that you respect yourself enough to make yourself a priority. Guys, I've been talking for a while here, and I am conscious of the fact that this video is, one, becoming too long, and two, I've given you quite a lot of information and I want you to have time to digest it. So what I'm going to do is to split this video into two parts. This first part is for people who are just starting a business, and the mistakes that I'm going to mention in the second part of the video are those that I see people make when they have been in business for, say, a couple of years. So still fairly new to business ownership, but with a little bit more experience and likely a little bit more revenue coming in. When that second video goes live, I will put the link to it in the description box below. But until then, I will leave you with the two that are suggested on the screen right now. They have been carefully selected for you to help you become more confident in managing your money and your mind around it. So go check them out if you've got the time. That's it from me for today though. I hope you enjoyed this video. Thank you so much for watching, and I'll see you in the next one. Bye!